Welcome back. You're watching Newsx and I'm Savri Jindal. The Indian rupee tumbled to a new low as currency fell below 90 against the US dollar for the first time. The rupee, one of Asia's worst performing currencies this year, has slipped nearly 5% since January amid heavy dollar buying by banks and a massive exit of foreign investors who pulled out $17 billion from Indian markets in 2025. Tariff tensions with the US have added pressure as well. The impact of this could be manifold, with costlier imports making fuel, electronics, cooking oil and daily essentials more expensive, while foreign education and travel will become significantly costlier for students and families. However, the falling rupee will also prove beneficial for exporters and for NRIs sending remittances who now get more rupees for every dollar. Let's take this conversation forward. Joining us at this point in time is Dr. Jayajit Bhattacharya, President of CDEPR, Mitali Rukore, economist, also with us on the broadcast, Nasir Salim, a former banker, also joins us on the broadcast, and last but not least, Dr. Ajay Dua, former Commerce Secretary, also with us on the broadcast. I'm going to take this conversation forward with Dr. Ajay Dua. And sir, I'd like to understand from you, what is the driving factor? What are the key factors involved in the fall of the rupee?
Thank you very much. I think three or four would be worth pointing out. The first of it is our current account deficit, the trade deficit increasing rapidly through the year. We've seen it to come during the current year to one of its highest levels, the deficit between our exports and imports. Second, I will attribute it to our exports being affected by the sanctions going around the world, particularly of the United States, and the fact that the United States dollar vis-a-vis us has gone up does show that we are impacted by clearly impacted by the sanctions or the higher tariff of 50% imposed upon us by the US. Third, I think to offset the trade deficit, normally the capital can come, the short-term capital flows, etc., do come in handy, as do the long-term. We are finding that as of now, the FPIs have been pulling out money from the Indian equity market and not really being very excited about the Indian capital market to bring their money here. And the fourth reason, I would say, is that there are short-term speculators who are now demanding the dollars to square off the short-term deals which they have done, and that means the demand for dollars is increasing. And finally, let me add to it, is the reason which comes to my mind is that the Reserve Bank of India has not been very aggressively participating in checking the value of the rupee. It has intervened, but it doesn't seem to be too worried about its depreciation. Yesterday, it did make a mild intervention when the rupee touched 89.90, but then I think the stubbornness took it to interbank trade to get it to 90, and then settle later at 97 first and then 92. The point I'm just trying to make is the Reserve Bank of India does feel that, or did feel, because of its intervention, almost it's exhibiting a new policy that it would let the rupee come down to its real value, and real value now, as we know, the rare is, we are somewhere on the bottom side with, against us, only the Indonesian rupiah, the South African, the South Korean won, and the Chinese renminbi doing worse than us, but all other currencies of the world are well above us.
Right, absolutely. Let me rope in Mr. Nasir Salim into the conversation. And so I'd like to understand from you, what are the implications that come with the Indian rupee now hitting a record low?
Yeah, hi, good evening. Am I audible now?
Yes, sir.
Okay, hi, good evening. Thank you very much. Great to be back on Newsx. Broadly, if you look at the economic impact, and I would start with, one of the most important factors, which is the current account deficit. You see, a weaker rupee will obviously widen CAD as import bills rise, especially for crude oil and gold. And India continues to be one of the largest importers of oil. The other, of course, probable impact will be on fiscal pressure. Higher subsidy burden on fuel and food if the government tries to cushion inflation. Corporate margins at the other end will also get impacted. I mean, there are important import-dependent sectors such as the automobile, electronics, aviation. They will face margin compression, I must tell you. And there's obviously going to be external debt, stress. India's external debt servicing costs will rise, impacting government and corporates. And I think there is obviously something which we've been witnessing over the last few quarters, specifically with capital flight risk. India will face a lot of risk in terms of the persistent currency weakness may trigger more FI outflows, weakening rupee further. Now, obviously, these are some of the, I would say a pessimistic view. But look, there is also an optimistic view, which is that it's a big boost for exporters, right? There's IT, pharmaceuticals, and textile sectors which gain as dollar earnings rise. Advantages to a very select, being a former banker, I can tell you this, that it's great advantages to NRIs, because usually between December and March, NRIs sending money home will get more rupees per dollar. You see, and the tourism inflow. Let's not forget that India becomes cheaper for foreign tourists, potentially boosting hospitality. I think that's again something which is going to play out hopefully. And then there is long-term competitiveness, right? A weaker rupee can make Indian goods far more attractive globally. There is a push to make in India, which again, I think there is a lot more that needs to happen there. But there is a silver lining. With a weaker rupee, it can make Indian goods more attractive. And then there is, of course, the stock market impact, which is export-heavy companies may outperform, attracting sector-specific investments, as I just mentioned to you. So broadly, from a macro perspective and from some of the perspective as far as India is concerned, that would be the impact on the rupee decreasing to the dollar.
Right, absolutely. You, of course, put out the silver lining perspective that comes with what's happened over here. Let me go across to Dr. Jayjeet Bhattacharyan. And so, the focus point over here is what's going to happen to the common man over here. How is it going to impact all of us? Because, of course, the iPhones, the cars, so on and so forth, the fridges, all of that's going to get expensive now.
Yes, it will, but it will be worthwhile to see how long this rate holds, because a lot of it is driven by the fact that US-India trade agreement hasn't happened. Once that agreement falls into place, perhaps there will be some stability to the rates, or perhaps it can even get reversed to an extent. But if it doesn't, then there will surely be inflation coming in. However, if you look at the RBI's viewpoint in terms of the rate cut, which is an indicator of whether they expect inflation to happen or not, it seems that the RBI is in fact even prepared to have another rate cut, which implies that they have some information and the viewpoint that inflation will not happen, and therefore perhaps the rupee slide will be curtailed at some point in time, because if the rupee gets weaker, obviously it just means that you need to pay more rupees for every product, and therefore inflation will happen. So if it continues the way it is continuing, obviously a lot of the things that we are consuming will get expensive, even though we are the second largest manufacturer of things like mobile phones and much of the white goods, but their components are still coming from outside of India, largely from China in that sense. And China's rate has held with US. So it's not that the Chinese yuan is declining in value, and therefore we need to shell out more yuans to buy the components, and therefore the kind of products that you're talking about will be expensive for the common man. Also, the cost of energy will be going up. Most of our energy is imported, and that cost will be going up. Also, it'll be a double whammy because there seems to be some curtailment in terms of procuring cheap energy from Russia. If that goes away, then we are anyways paying more in terms of dollar for every barrel of oil that we're importing, and every dollar is costing us more because of the reduction in value of rupee against the dollar. So there is a series of whammies that will happen if the rupee continues to be in the trajectory that it is in right now. However, my gut feel is that it will not continue in that fashion if we have the US-India trade agreement in place.
Absolutely. Ms. Mitali Nikore, I'd like to rope you in over here. And, Mr. Nasir Salim also, of course, put out the bright side of things. But we also have to think about the importers. What exactly happens to them? What exactly could be the ramifications over there?
First of all, thank you for bringing me into the conversation. I think I agree with all of my friends here, Ajay sir, Jayajit sir, Nasir, that we are looking at a glass half full in some circumstances. But let me break down a little bit of what we are hearing from ground, because at Nikor Associates, a lot of the work that we do is focused on talking to exporters, is focused on talking to industry. And today I'm actually sitting in Ahmedabad, and I've been speaking to a lot of people from the gems and jewelry industry. I've been speaking to a lot of people from the industrial areas here, right here in Gujarat, and there are many of the western region. So what is being observed is, number one, the impact on the export goods is actually being viewed positively, because there are a lot of goods that were actually stuck in inventory which are now coming out with the fall of the rupee, because it dampens, it reduces the price, and therefore reduces the impact of the US tariff also to some extent, because with the rupee getting cheaper, goods get cheaper. The second thing that we are hearing from industry when we talk about the IT industry is that the IT industry is telling us it's now easier for us to innovate and introduce new services, because the Indian IT industry is also at a very interesting inflection point where they have to start offering AI transformation products to their customers. So again, when their services become a bit cheaper because of a cheaper rupee, it's easier for them to innovate and offer packages to their existing clientele and say, okay, by the way, you wanted to have this AI transformation solution from us. Here we can offer it to you for 10% cheaper now, because of the exchange rate gains that they're making. So definitely for exporters, whether in goods sector or in services sector, this is actually on ground also panning out to be definitely better. This is also panning out to be positive for exporters who are going from, say, one country to the second country. A lot of aggregation logistics players are also benefiting from this. Of course, the major impact is going to be on oil prices. And in a way, this is also leading to a question for India, that how much of our trade should be in USD. It's kind of again bringing us back to that question of, should we start trading in other currencies with some of our long-term partners? And that's a policy question that has to now be confronted. The third point I want to make is about investments, and about investments coming into India. Yes, there's a lot of speculative investment. But if you look at the latest data that has come out just 2 days ago, we've seen actually a 16% increase in foreign direct investment in the first half of this year, April to September, vis-a-vis last year. And the third largest investor in India is actually the United States. Now, this is very interesting on the back of the kind of tariff announcements, and on the back of the fact that the Indo-US trade deal has still not been worked out. That has not stopped American industry from coming and choosing India as a base for their operations. A lot of this investment is coming in global capability centers and GCCs. And GCCs are offering a globally competitive service from India, and it's companies from Singapore, it's companies, you know, which are based in other countries, it's companies from UK, it's companies from the US. They're all coming and investing here. So the kind of value proposition that we are offering as an economy, and the kind of growth rate that we have shown and posted of 8.2%, which just came yesterday, is showing that the overall value proposition of the Indian economy is very strong. Yes, this is a little bit of speculative capital from foreign institutional investors that is driving this run. Secondly, of course, the uncertainty around the Indo US trade deal. These are definitely factors impacting the rupee. But the core fundamentals of the Indian economy are very strong, and this falling rupee is also benefiting our exporters in a massive way.
Absolutely. Dr. Dua, I'd like to rope you on over here and, get an understanding from you as well. Like Ms. Nikori said, the glass is half empty. There are the pros, there are the cons, but what do you make of the big picture over here? So if you could unmute yourself, please.
Yes, please.
Yeah, we can hear you now.
Yeah, what I want to say is that let's not get too worried with what we are seeing of the rupee touching, the dollar becoming worth 90 rupees to us, is merely a psychological, 90 rupees barrier was a psychological one, saying we've crossed from the 80s, now we are in the 90s, there'll be a run on the Indian rupee, it might become 92, it might become even beyond that very soon. I don't think if we monitor the movement of the rupee vis-a-vis the dollar throughout the year, how much is the depreciation we've seen? 5.63% only in the 11 months. So I do not think that we should fear too much about it. You asked me the earlier to lead the discussion by saying what has caused it. I had mentioned those, and I had left this for a later discussion to say that this is not the worst year for India, 2025. We've seen years, so for instance, 2018, the depreciation was almost 20% during the year. And at 3 or 4 years, times during this period of 8 years, we have seen a faster depreciation of the rupee. So this is the first point I want to make, that yes, we have crossed a so-called barrier, but things haven't changed drastically, so that it will make our imports attractive hardly. Through the year, if it is 5%, how much depreciation have we seen during the month of October from 89.37 to 89.95 or 96, 60 paisa, which is probably the largest in any month we have seen so far, but that itself is not tremendously. Similarly, our exports. So theoretically, academically, yes, if the rupee is cheap, we should be able to sell more, and we need to tighten our belt before on the imports. Otherwise, the CAD also kind of changes. Second point I wish to make here is that yes, we should not let it go very much beyond. Now it's the time for the policymaker and intervention. The government and the Reserve Bank of India have to take a call saying, yes, enough is enough. Reserve Bank should get into the kind of policy which it had been adopting earlier, stable, keep the rupee stable. Through the year it has followed it, but of late, in the last 4 or 5 months, I think letting it drift probably is not a good idea, because it gives an impression around the world which is different from what is the strength of the Indian economy. We're not doing badly at all. It was just mentioned, recall that 8% rate of growth in the last quarter.
Yes.
And earlier years, we are one of the more rapidly growing ones. Even now, we think we will cross the 7% barrier during the current year, having done well in Q1 and Q2 even better than that. So the if for certain reasons which were mentioned earlier by my colleagues and I had mentioned earlier, the rupee has been depreciating. We note that. Let it be noted. Let's try and stabilize it now. See, I am not one saying that for the sake of stabilizing, Reserve Bank should come in because we have at one point of time there was a big divergence between the real value of the rupee and how it was being controlled. Too much of market operations had kept it at a higher value than it was, but now the two seem to be almost at the same level. There are enough data available to show that further deterioration, depreciation should not be really permitted by the Reserve Bank. And I am sure that the Reserve Bank, which is now not likely to take a call on the interest rate that intervened, that's the final outcome has yet to be reported. It is likely that on this front, it would not want to make things worse for the economy and it would intervene at the earliest.
Right, you've made a wonderful point over there. Numbers are, playing with our psychology. And just an example for our young audience over here: if you go to a shop and you want to buy something that's 799, you're going to easily go ahead and get it. But the minute that number becomes 800, you'll think twice. All right, Mr. Nasir Salim, I'd like to come to you and take this conversation forward with you because again, we're talking about psychology and how it's being played with. From 89 to 90, thinking about 90 as a number, that's big. But when you talk about just that little jump, what is then your advice to the people who are sitting at home and thinking about this jump that has been made?
You've asked me the mother of all questions, I must tell you. And you're obviously asking me to put on my, what should I say, my personal finance role. Okay, so, clearly, as far as I think, look, there's only good news, right? From every situation that arises, we need to see how we can make the most of it. And I think to your viewers sitting at home watching this from offices or wherever, I feel that from an investment perspective, sectors such as export-oriented sectors such as IT, pharmaceuticals, and companies with dollar revenues. Very, very simple. Companies with dollar revenues seem to be getting some fillip, will get fillip each time the dollar strengthens as against the INR. I think the other quick question is, hedging. I think corporates that are viewing your show right now may want to kind of consider currency hedging strategies, with their treasury to see how they can kind of make the most of this situation. And clearly, I think, I fully agree with my fellow panelists that this is a time when both the policy makers in the government of India and the RBI need to have a very, very balanced response system in place where the RBI may require to intervene. Reserves are depleting is a concern, but it's not a major concern because we've had a very comfortable dollar reserves now in the country as compared to previous years. There is this interest rate dilemma, which I must tell you. Rate hikes to defend rupee could slow growth and hurt credit growth and credit demand. So that's again something which is it's something that needs a good fine balance. And then there are structural reforms. The need for boosting domestic manufacturing and reducing import dependence. I think one of the few things that we would want to see more aggressively is how do we make ourselves less dependent on oil, for example. Right? I know it's very easy to say this on Newsx and just come up and give you this nice, great knowledge on television. It's we need a policy think tank to be more effective on reducing our dependency on import on oil. We have seen some initiatives as far as the automobile industry is concerned to go up and push for EVs, because if that starts to show up, it has a direct impact on inflation, right? So obviously, and then of course, dollar strength often coincides with global uncertainty, and India's vulnerability to oil shocks therefore increases all the more. So I think that is something which we would like to see. And of course, when I said make in India, I also said, and I must communicate to all your viewers, that trade competitiveness, while exports gain, global slowdown could limit benefits. So it's a good mix and match. Time for policy and RBI response to be more balanced, and as I told you, sectors which are dollar revenues, IT, pharmaceutical, tend to perform better each time this happens. Rising yields, on the other hand, and currency risk may deter foreign bond investors to come in. That's one negative. But again, structurally, India is on the global map. Will contribute largely to global GDP. We are, while of course there is an argument on this entire quarter GDP number which has come out, which is the old series versus the new series, which is predominantly, GVA, gross value added at base prices against GDP at market prices. But that's a separate discussion. I
Right.
think structurally, India is expected to do better. Gross value addition will add up, and as Mr. Dua just said very clearly, that there have been sharper, uh, you know, uh, currency depreciation as compared to these. It's not something which will tend to derail India, at least in the medium to long term.
Absolutely. We started by talking about how the rupee had hit a record low. Then we spoke about the silver lining. I'd like to go to Dr. Jayajit Bhattacharya and get in a perspective over here. Uh, we've spoken about all of it, but now we have to talk about the future as well. What are perhaps the sectors in your assessment where India should be pushing more?
We have been performing well in a few sectors, and I think some of them were mentioned by Nasser Salim, which is sectors like pharmaceuticals, machinery, engineering goods, and so on and so forth. So we need to double down. See, at the end of the day, is our rupee going down? It's getting weaker, is because we need more dollars and the world needs less rupees. It's as simple as that. And the way to get more dollars is by exporting. And therefore, if you can double down on those products where we are already good, I think that would really ease the pressure on the rupee, and therefore finding more new markets which are alternate to the US market would significantly help. Now, one thing to keep in mind is that in spite of the fact that our exports to US dipped by, if I remember correctly, roughly 25% post the increase in US tariff against Indian goods, we were still able to grow our exports, and that happened because we found new markets. Now imagine the fact that if we are able to get a trade deal with US, we'll restore our market presence in US, assuming that the trade deal is a fair deal, and along with it we have also discovered new markets, and if that momentum continues, it's going to be a stupendous growth that India will be seeing. So a lot will clearly depend on the US deal with India,
थोड़ी
and
देर में कॉल बैक कर रहा हूँ मैं कुछ ना
US
थोड़ी देर
also
में
needs
कॉल
a deal with India very, very quickly. So we see that that's going to get fixed, and if that gets fixed, India will be in a very sweet spot because it would have discovered new markets while
Right.
regaining its market in US. And if the rupee still stays weak, we will be very, very competitive from an export perspective. Also, I would assume that there will be more hirings happening in the Indian
इधर होता
GCCs because these hirings will be cheaper as compared to the hirings in US or anywhere else. And the fact that H1Bs are being pressurized in US, there will be a tendency to hire more in India. And if that happens again, there'll be more dollars flowing in into India. So it seems very, very positive moving forward.
Right.
But there are a few things that needs to fall into place.
Right, absolutely. Mitali Nikore, I'm so sorry, I'm short on time, but I'd like your closing comments, please.
I think the closing comments are very simple. We have to have a longer term strategy to make our economy stronger from within. The more we can actually make in India, the more we can follow the path of Viksit Bharat, the more we can, have a strong situation in the global markets, and all the
हो
rest
गया
will follow.
अब हुआ था